Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the February 23rd stock market wrap up for you to use tomorrow or for a little while longer because the trend's the same no matter where you look. Let's start with the NYSE. Since early 2008, you can clearly see it's still in a downtrend, and from its October highs, it's now down 54%. So long term, it's been down. Sub-intermediate term from around the July area, down 45%. Sub-intermediate term, let's look at the lowest bar possible so I can just see how it's down. Down 0.37%, so basically flat, but still down. And then since just recently, about a week ago, it's down 11%. So the NYSE is in a downtrend on every single time frame. S&P 500 is the exact same way too. Now, the NYSE lost 3.55% on lower volume. The S&P 500 lost a little bit less, 3.47%, and volume was lower. I just want to remind everybody, stocks can still sell off on low volume for a very long time. The only way that they will stop selling off on low volume is when it's met with heavy accumulation. And if that wants to last longer than like a day to a week to a month, you're going to need stocks setting up in bases in both leading stocks and very hot speculative stocks that have got the momentum money running into it. So the S&P 500 is the same way as the 600. Let's look from the top in October how much it is down, and it's down 52%, so just as ugly. Sub-intermediate term, let's use the November low, and as you can see, down 1.21%. So it's slightly down to lateral. Short term, down 11%, just like the NYSE. Bottom line, market is below the 50-day moving average. And as I want to show you back here even in 2005, as you can see when I go plus up on my arrow, after 2003, once the golden cross occurred with price above it, the 50 and 200-day moving average held the price until 2004 when they re-rolled over, but then you had a golden cross immediately, and that was your hint to stay long again, and that lasted till 2007 when you had your death cross in December, and since that death cross, the price has not gotten back over the 200-day moving average or the 50-day moving average, so you ultimately would have been out at the end of 2007, and you would have missed this entire 51% decline. So I just want to show you how important those 50 and 200-day moving averages are that so few people actually seem to use. How weird. NASDAQ's the exact same way, as you can see, going back to the October high. The NASDAQ is down now 50%. It is still slightly above the November lows. I want to show you that closing low, 1316. It's at 1387 now, so it's very close. If we use those November lows as the lows, it's one of the only indexes that are actually in an uptrend on the sub-intermediate term, 5.44%. However, I got to use the October lows for the sub-intermediate, and it shows it down 10%. So overall, every time frame is down once again for this market. NASDAQ's the same way. Since the death cross in 2008, price only got above the 200-day moving average, but the 50-day moving average never followed, never giving you a buy signal. Hence, if you would have gotten out at the death cross in 2008, you would have avoided a 42% loss. Just simple technical analysis works that well. S&P 600, major nasty downtrend, 208.60, almost near the last closing low of 208.20. And as you can see from the highs in October 31st to now, the S&P 600 is down 51%, just as ugly all over the place. Same way here. It got it back above the 200, but did the 50 ever cross above the 200? Nope. It did there for a little while, but notice when it did that prices quickly fell back below, so that was your cut loss area. You would have been out. However, if you were stubborn and held on, you lost 40%. So it's just down on every downtrend. Let's look at the Dow Jones Industrial Average to show you one more big downtrend, show you on every time frame, very, very down. Let's go back to the October highs and show you how far the Dow Jones is now down with a new low, 49%. So even the Dow Jones Industrial Average has gone from right around 13,500 to 7,100. So very, very ugly out there. And now what you can see here is that the 2009 lows, 7114, is below that. And as you can see here, going all the way back, you got to go all the way back to 1997 to see the lows that we got now in the market. So basically 12 years have been wiped out on the Dow Jones Industrial Average. And how many years on the New York Stock Exchange? 2009. Well, same thing, 12 years. So 12 years have been wiped out of the NYSE and Dow Jones. So it's a pretty ugly market. And this shows you why buying on the way up and selling on the way down is the smartest thing to do, and why cutting your losses is smart. Now, let's look at, let's see what I want to do. Just some commodities. Oil, still stuck in between that 30 and 45 range, so 30-45 continues to be the range. How does platinum look? Still bullish. Had a bullish tail today despite being down 0.56%. How does silver look? Another glorious up day with another very bullish tail. How does gold look? Barely down, but look at that very bullish tail. Open at 994, close at 992. And let's look at some of these ETFs that are out there on these things. Let's get up down close again so it looks like I like. Let's do gold. IAU. Beautiful. Kind of a nasty day today, but still with the reversal, the big red bop. But notice it's open bar. You know, lower, open, higher, close. So overall, I got to say, not that bad at all. GLD, still nice and pretty, very pretty. A lot of green, 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 green bop. A lot of huge accumulation. You can see like on the weekly here the past 5 weeks. 4 out of 5 weeks, even that 1/5 week, it was just slightly down, had a tail. So another gorgeous chart. How's DGP? Same thing, looking gorgeous, looking beautiful. Since I went long, and since some of you guys went long DGP, you guys are up 13%, while I believe I am up 9%. Let me looky here. Yeah, I'm up 9% still. It's a buy on any pullback to the 50-day moving average and low volume. Let's look at UBG. UBG looks good. That's Bloomberg Gold. And then let's look at UGL, which is also a double, and that looks just gorgeous. And since here is the breakout right here, heavy volume, big price move. Not green bop yet, but it had it before. There was your 17 move. You could have gotten it here, but you would have gotten the cut loss. That's why here, and then the next few days were good. This probably would have been the day I went long, since it had the green bop that day. But I played other things. Let's look at silver, SLV. Gorgeous. Look at that. Just beautiful, beautiful, beautiful. AGQ, like I said, from the buy point right here, breakout, heavy volume, very strong green bop. If you would have taken that move, you're now up 44% in 1 month. Way to go, way to go. USV, very nice, kind of illiquid, but still you can see the uptrend. DBS, illiquid, but you can still see the uptrend. Let's look at some platinum, PGM. Pretty, huh? Very kind of a liquid some days, but now it's got volume. And then, of course, PTM, which you should all know, gorgeous. Very pretty. Very, very, very pretty. My only problem with it, once again, is that lack of volume. That's why I go with gold and silver. However, there's nothing wrong with being long platinum. And I showed you platinum there, showed you silver already on the actual futures contracts, and you can see that they match up perfectly. Now let's look at the XAU, which is the Philadelphia Gold Silver stocks. You can see that it's in a slight uptrend. XUF, which is the gold silver, that looks like a slight uptrend to me too. The GOX-X, or the GOX-X is the CBOE Gold Index. Clearly an uptrend right there. And then the Dow Jones USPM, which is Dow Jones US Gold Mining Index. Look, nice uptrend. And as I already showed you, GLD is looking perfect. So all is well. 9 minutes left. So we have 1 more minute. And all I want to do here, there is going to be a part 2. And I guarantee there's going to be part 3 for you subscribers, because we had an excellent day. Market was down how much, everyone? Almost 4%. Let's see the NASDAQ. The NASDAQ was down how much? 3.71%. How much was I up today? 8%. Yes! Do you know why I was up 8%? But really why I'm not even that excited? Because I have something better I want to show you. I want to go to general discussion on my paid site. I want to go to my members pick and show you what I wrote down. And as you can see, CanSlim System is #1 growth strategy from 1998 through 2008. An 11-year independent study by the AAII found IBD's CanSlim investment system gained 1,351.3%, while the 500 S&P dropped 6.9%. The CanSlim system dramatically outperformed the 500 over the past 11 years, according to the AAII. That time frame includes 2 bull markets and 2 severe market crashes. crashes, including the historic bear market of 2000 as well as the 2008 financial crisis. AAII's independent study found the CanSlim system was the #1 performing growth strategy with an extraordinary 1,351.3% gain. During that same time, the 500 lost 6.9%. The 11-year cumulative performance was tracked from 1998 through December 31st, 2008. Folks, can you ask for much better than that? No, and here's why. O'Shaughnessy and Martin Zweig's like little growth monsters were both beating the CanSlim strategy until this year. And because the CanSlim goes to cash in a bear market, yet they tried to play the bear market, CanSlim is now #1. Would you rather have a 1,350% return or a negative 7% return? Would you rather be down 4% today or up 8% today? This is Joshua Hayes. Aloha.